It's a little disconcerting to many. Interest rates have risen at the fastest rate in 4 decades. And this week, the Fed raised interest rates again, the 10th straight increase, because inflation remains stubbornly high. Goal is to bring inflation under control, but there are those who say it is leading to a host of other problems and may even lead to recession. Joining me on the morning show, Joe Cryer, partner at Tidal Flow Trading. Good morning, Joe.
Hey, Bruce. Good morning.
So there are signs of a softening job market. We'll know a little later today when the numbers come out, and slower economic growth. Turmoil in the banking sector. Jerome Powell may have even hinted at it. Will the Fed pause on rate hikes a bit now?
I think they almost have to. And the markets are pricing in rate cuts coming later this year. But Jerome Powell is in a very tricky situation because we put all this stimulus money in to revive the economy from COVID. And all of a sudden people are spending and their habits are up. And you know, the purpose of these rate hikes is to get people to just cool it a little bit, slow down on housing, slow down on borrowing, and just kind of let that money matriculate through the economy a little bit.
And look, you know, you can't argue. People are nervous about their money. The stock market's in turmoil. Banks are in turmoil. And in part, and even Jerome Powell admits it, because of the Fed's moves. What do we do with our investments? I mean, how do we protect our money? Where do we grow our money?
Yeah, well, you know, sometimes it's better to sit on the sidelines and let things play out a little bit. And I'm not saying get out of the markets or get out of the banks because, you know, the Biden administration has done a great job of protecting depositors, and certain banks are going to fail. JP Morgan took over First Republic last weekend, but your deposits are still insured up to $250,000, and actually the feds are saying they'll protect you up unlimited almost. So, you know, money in the bank is still safe. There's turmoil going on, and you know, yes, a recession could happen. And Jerome Powell, by the way, is the first Federal Reserve banker to actually admit that out of the last 10. And you know, the last 10 were wrong when they said we didn't think there was a recession. So he's preparing people in the right way here.
So let's talk about the R word. And I know that, you know, there's a particular economic definition for recession. Some say, look, we're already there. Either way, look to 2008. Any comparison to 2008 and 2023 in recession?
The causes are different, but the end result could be the same. You know, recessions are actually a natural part of a cyclical economy, whereas inflation can get out of control and ruin your life for 10 years. So they're picking the lesser of two evils, and a recession is not the end of the world. It's more of a reset where bad businesses fail and new businesses get started, and people adjust their spending habits and kind of start from a new baseline. So it's really not the worst case scenario.
Yeah. You know, back to the question of what do you do with your money aside from the mattress? You know, there are some places where you can get, you know, 3, 4, even 6% interest before there is some sense of financial stability.
Absolutely. In fact, yesterday I bought 3-month CDs yielding 5%. We haven't seen that in years and years. You know, and for the longest time, interest rates were so low that you had to be in the stock market. There wasn't an option to go buy CDs and bonds and things like that. So, you know, you can get safe returns and wait this thing out. And by the way, the stock market, there's only 7 stocks that are accounting for about 80% of the S&P 500's performance this year. So without those 7 key stocks like Microsoft and Amazon, et cetera, this market would actually be down about 5 or 10%. So, you know, there's things going on under the surface, and investors can actually go look for conservative value companies, good old utilities, you know, children's widow stocks, as we used to call them.
Right. And, you know, for people who are at an advanced age, you know, who worry about their retirement income and their nest egg, you know, like my dad used to say, look, the bottom line is historically, the stock market never stays down, so just wait this thing out. Joe Cryer, always appreciate you. Thanks much.
Thanks, Bruce.